sector?
The troubles are still there. They've been there for a very long time. And when I talk to my sources, they basically say department stores are in a long decline. And not anyone really sees when that's stopping. As an example, Nordstrom about a year ago rejected a take-private offer for $50 a share. It's now trading more than $20 below that. I mean, that's how much we've seen everyone fall in a year, and this is part of a much broader decline.
Would the tariffs have caused that shakeout to happen faster?
I think tariffs certainly would be bad news, and certainly the stock market has been reacting to them, so it would have been a further pressure. But I think tariffs or not, department stores have a really big problem on their hands.
Who lives in the cross-section of those hit by tariffs and those stores that were already ailing?
I think for them, I think the tariffs, as I said, the tariffs are there as an issue, but the bigger issue is who is and who has the fundamentals kind of to survive. One name that people often mention to me is Nordstrom. I don't know the last time you guys were in one. They have a much smaller store footprint than someone like Macy's, which has several hundred stores, and it's really known for its customer service. So this is a department store. My sources have told me there's a controlling family that's trying to increase its stake, and part of those efforts is because they and others think that they may actually be a survivor.
Okay, Lauren, why don't you stick around? We want to bring in Charlie O'Shea of Moody's for who is best equipped to survive this retail apocalypse, or what could be a retail apocalypse.
Apocalypse.
Charlie, if we removed all threats of tariffs, would your view on the companies that were on the verge, would that change?
If we remove tariffs, yeah, it probably would.
It would. So it is a factor.
Yeah, if you're a distressed retailer, and that for us is CAA rated and below from a credit perspective, and the tariff announcement comes, if you're the CEO, you're on your front porch looking for the locusts, because how many more things can go wrong for these people? They've had to deal with Amazon, they've had to deal with Walmart dealing with Amazon, they've had to deal with everybody dealing with Walmart and Amazon, and then you've got the whole secular shift online, and they don't have the money. And you know, money talks in retail, and it gives you a lot of flexibility, as we've seen with some of the better retailers, and that's the game. The game is you've got to be nimble, you've got to be able to invest, and a lot of retailers just can't do that. They're just buying time right now.
There are a lot of retailers whose credit ratings are severely debilitated at this point, but not a lot of them necessarily are publicly traded companies.
Right.
So in terms of the publicly traded company sphere, which retailers' debts are most concerning to you?
Well, if you look at our list, and I think there's 14 names on it today, and I'm going off memory now, the public names, and I'm not besmirching anybody, but probably the biggest public name on that list is JCPenney. But JCPenney's got liquidity, and that's been helpful so far.
They're under threat of being delisted from the NYSE. I mean, the equity is struggling to hold a buck.
We're credit analysts. The equity matters at certain times, but when we're looking at these companies, I'm speaking solely on credit. I'm not speaking on the equity values or anything like that. And we've got Penny rated where we think it belongs right now.